Watch it. Watch this video all the way through. Look, Bitcoin in the 4-hour time frame, it still may reach the Fibonacci golden pocket, as I talked about in my last update. Currently, we're reversing off the 50% retracement. Again, that's it. We're going to go down and take out the liquidation low. We're bouncing off a trend line with these bottoming tails that you're seeing right here. Trend line going back to April and May. I'm watching. Do we get a bigger Fibonacci retracement or the 50% retracement? Is that all she wrote? And we resume the decline. China doing exactly what I said they would do. China escalating the trade war. I told you this was going to happen. If you watched my stock video yesterday, I talked about it in great length and detail. I think I briefly mentioned it in my Bitcoin video yesterday. Watch the Fibonacci's here in the 4-hour time frame. There's eventually going to be a larger divergence that will develop, closing below these levels or closing below the liquidation low. For our chart, we got a small divergence right there, giving us this bounce to the 200 period. You could make it to the 50, you could make it to the 10 in the daily, getting a larger Fibonacci retracement. You get rejection here. Again, we'll be watching to see if a larger divergence develops. The divergences have been calling the tops and bottoms. I've called every single top and bottom here correctly because of these divergences. Sold off nearly 4%. We're trying to recover. With a few more hours in the trading session, Bitcoin's down 2.25%, trying to bounce off the trend line right here from the April and May lows, connected to the June low, connected to the September low, 108,000. And the liquidation low took out this trend line. We didn't close below it. We tested it on the 11th. We tested it and bounced off of it on the 12th. And right now we're testing it yet again. If you bounce here, you get a bigger Fibonacci retracement. You break this level, you're moving closer towards 98,000, towards the 100,000 area. Now signals remain bearish. Watch this trend line. Watch this video all the way through. I'll be talking about the 4-year cycle, the Bitcoin halving cycle, from cycle top to cycle top, cycle low to cycle top. Many things are pointing to an October top, which we just had this peak in October, on October 6th at major resistance. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that. Support the channel. Let me know you want this information. The link below will take you to a secured site. Watch this video all the way through. Make sure you watch it. If you want to know what's going on, watch the video all the way through. You want to be clueless? Don't watch the video all the way through. I'm going to show you the cycles and why we could be topping here in October. The Moon Boys are now scoffing at this idea that Bitcoin could actually be peaking. They're always blindsided. Watch the video all the way through. You make up your own mind. I presented the bullish case, what would get me extremely bullish. I presented the bearish case. My last update, I told you what will validate and confirm a bear market. It's taking out the 50-week moving average and closing below it, getting confirmation. An open and close below the 50-period moving average in the weekly time frame. That will confirm a bear market. Watch that video. I'll link it at the end of this one. Well worth your time. I've been warning you that, again, if you believe in the 4-year cycle, the Bitcoin 4-year cycle, well, that could be coming to a conclusion here in either October, November, or December. Right here, with this scenario, it's ending now. Here in October, I've talked a lot about this. And again, let me just show you quickly. This is the peak over here. In 2013, we had a bear market. In 2014, we bottomed out January 2015. We dropped 86%. Now we formed a bottom here. We rallied up, and then we came down and we moved, just undercut that low just slightly. And we got a double bottom pattern. If we take the low from the first low of the double bottom pattern in early 2015 to our bull market high, you get 152-week bars. This is the weekly chart. Going from the first low that was made in the double bottom pattern. We did slightly undercut it, but if you include the first low, you got 152-week bars. We peaked in 2017, December of 2017, and you dropped. You dropped for 52 weeks exactly. 1 year, you dropped, and you dropped 84% this time, 86% over here, 84% over here, and you dropped 52 bars. So 152 and then 52. And then from that low that we had in 2018 to our bull market top over here in November of 2021, you have another 152-week bars. Do you see this? 152, 52 bars lower, 152 in the bull market. This is the 4-year cycle. Okay, then from the top, the exact top, in November of 2021, we dropped down to, again, forming a little miniature double top like we did over here. You had to our first bottom, you have 52 bars. You came back and you undercut that ever so slightly, and you formed a little miniature double bottom in the daily time frame. You have a bottom here, though, with 52-week bars from that first double bottom, like we have over here. The first double bottom, 52. So 152 bars in the bull market, 52 bars in the bear market. The bull market top, 2017. The bear market low, 2018. The bull market top in 2021, 152 bars. The bear market low in 2022, 52 bars to our first double bottom. And then we have right now, just reaching at a recent high, Bitcoin reaching 152 bars from that first bottom down to, or I should say up to, our October 6th peak. Absolutely incredible. I mean, that is incredible. So if you believe in the 4-year cycle, if you believe it's not broken, if you believe that Bitcoin is going to turn off the major resistance levels that we're at right now in the weekly time frame, Bitcoin has topped. And again, absolutely incredible pattern. The decline over here was 59 bars from the high to the low after the 2013 peak to the January low in 2015. But 2015, you've got 152 bars in the bull market, 52 in the bear, 152 in the bull, 52 in the bear, 152 in the bull. So again, this could be suggesting that we decline from October over the next year into 2026. Absolutely incredible. I talk about the 4-year cycle. Here it is. Here's one of them. This is taking it from the cycle low to the cycle top, 152-week bars. Cycle low to the cycle top, 152-week bars. Cycle low to the cycle top, well, October 6th, the week of October 6th was 152-week bars. Now, mind you, again, I'm taking the first double bottom here. I'm taking the first double bottom over here. In those double bottom patterns, we're slightly undercut in each of those cases, but again, pretty remarkable stuff. We are at risk of a top. If you believe in the 4-year cycle, it should be coming to a conclusion in October, November, or December, depending on my different measurements of the cycle. And again, you have a couple of different ways of looking at it. That was from cycle low to cycle high of the bull market. Here, we're turning off major resistance from the 2017 low with our linear scaling connected to the 2021 peak. Again, the trend line excluding the shadow marked these other peaks. We exceeded it, and we're turning down here. There's risk of a top with the 4-year cycle coming to a conclusion at this trend line right on the nose. We have our log scaling. Our log scaling, again, coming up, we hit the trend line from the previous highs in 2021. If you take this first high, slightly exclude the shadow here, connect it to the other peak here, the top in 2021, it's pointing right up to where we've reached here in July, in August, and then in October, we were just a fraction underneath that trend line. Now we have a potential reversal here. And again, if you take out the 50-week moving average, you'll confirm a reversal. And if you close below the 50-week moving average and then you open and close below it the following week, you'll confirm a bear market. There's hope for the bulls right here. If we exclude the shadows right here, again, we're at this level, or maybe we come down a little bit lower and then attempt a recovery. You got to be able to clear these resistance levels if we're going to resume the advance. Risk is we're topping, and then the highs over here pointing up towards this area. Again, these previous highs in July and August and October. So the risk is that we actually come down and break down, start taking out this longer term trend line from these lows back over here. The bullish case is we clear this level and try to go to the upper boundary of the channel, which again, going parabolic if you can turn it around. But you lose the 50-week moving average, you lose the 10-month moving average, as I talked about in my last video, it's over. Bounce off those levels, you have a shot not having the 4-year cycle complete. But just understand, we are turning off of major resistance here with the log scaling from the 2021 trend line, from our highs back in December of 2024 and January of 2025. They intersect right there. So you have major resistance, and our trend line from the 2017 high connected to the 2021 peak with our linear scaling. You have major resistance both with the linear and the log scaling in the weekly time frame. Cycle low to cycle high in the weekly time frame. Here it is in the monthly time frame. Again, from our double bottom pattern, the first low, 35 months from the cycle low to the cycle high, 35 monthly bars. The bear market from 2013 to the beginning of 2015 was 14 months. So again, very close to these other monthly declines. Here we had, after the 35 months, the decline was 13 bars, very close to that 14. It's going to be a little bit different from the weekly because you're looking at 1 bar per month. From the cycle low to the cycle high, 34 months in the monthly time frame, very close. The previous bull market back from 2015 to the 2017 high, 35 months, 34 months, and then we had, following that, a 12-month decline. So you have 14 bars down in the monthly time frame, 13 bars down from cycle high to cycle low. And then again, if we take it from our first double bottom, you have 12 bars. If you take it from our second double bottom, you have the same thing because they happened in the same month. And this is just looking at the monthly bars. So it's still 12 bars. So after the cycle low to the cycle high, currently, our current cycle high this month in October, you have 35 months. So you have 35 months very similar to what we had back over here from the 2015 low to the run up to 2017. Very similar, 34 bars from the 2018 low to the 2021 peak. So 34 months, 35 months. So if you believe in the 4-year cycle, you get the bull market lasting about 3 years. You have the bear market lasting roughly a year, approximately a year. And again, that creates the 4-year cycle with Bitcoin. Now, this may change in the future, but it's what we have right now. So there is risk that the bull market is ending at the trend lines I'm showing you in the weekly time frame. Maybe that can change if we can clear resistance. Start taking out the 50-week moving average. You start taking out the 10-month moving average, as I showed in my last video. You start taking out Bitcoin's average price. You start losing those levels. Weekly time frame, you close below the 50-week moving average, and then the following week you get a close, an open, and a close below it, confirming the close below the 50-week moving average. You have a confirmed reversal, validating a bear market. So again, telling you exactly what to be watching for, what I'm watching for, to validate either a bear market or to extend the bull market higher. We are in month 35 here from cycle low to cycle high, very similar to where we peaked in 2021 and where we peaked in 2017. This is the weekly chart. So we're looking at the weekly bars, and it's breaking it down at the beginning of each week. And that's why you're getting the 1,064 days, 1,064 days. If we want to get it more exact from the cycle low to the cycle high, we can actually break it down to actual days. Again, the 1,064, 1,064, 1,064. This is from the beginning of the week from the cycle low to the beginning of the week to the cycle high. You're getting the 1,064 days or 152 weekly bars. If you want to break it down and get it exact, we could take it and go to the daily chart from cycle low to cycle high. It's just a little bit harder to squeeze in here because of the daily chart. You have more bars rather than the weekly chart. But if we take it from the cycle low day to the cycle high, exact days, not the beginning of the bar from the weekly low or the beginning of the bar from the weekly high, but exact days, from the exact day of the bottom, or our first low of the double bottom, and the day, the top. You have 1,070 days from cycle low to cycle high from 2015 to 2017. Then you have 1,061 days Let me straighten this out. I had some things move on me because I flipped from the weekly to the daily. But if we go from the cycle low day in 2018 to the 2021 peak, again, from the very, very day, you're looking at 1,061 days. So you have the last two cycles, from the cycle low to the cycle high was 1,070 days, 1,061 days for the last bull cycle to the 2021 top. So if we take the double bottom, first bottom in 2015 and take it to the 2017 December high, you get 1,070 days. If we apply that to our first double bottom here in 2022, which would be right there, you get a estimated top of October 12th, 2025. We just topped on October 6th, at least so far. We take it from the exact day of the bottom in 2018 to the exact day of the top, 1,061 days. And we take that from the first double bottom, not here the second double bottom, but the first double bottom. It gives you an estimated top of October 5th, 2025. Does that ring a bell? We just peaked on October 6th. That's applying those two previous cycles, giving you an estimate for a potential top in October 12th, for the 2015-17 cycle, 2018 to 2021, October 5th. Both of them very close to our October 6th date with the cycle. That's from cycle low to cycle high with the double bottom in 2015. The double bottom here, the first double bottom low in 2022, I think it was around the 9th November. The first double bottom low was 1,062 days. 1,062 days from this low to the October 6th high. That was 1,062 days. We peaked on October 6th, very close to the 2018 to 21, and that was exact bottom to exact top, 1,061 days. Here we've got from the first bottom to the top on October 6th, 1,062 days. If we take it from the actual bottom, the second double bottom, the bottom, which again they were only $89 apart. At a bottom, and then we went down and we undercut it by about $89 or $90. If we take it from the actual bottom, apply this 1,061 days from this last cycle, then that gives you a estimated top on October 17th, 2025. So all of them in October from cycle low to cycle high, that larger 4-year cycle where you get the 1 year down and the 3 years up or so approximately. This is the double bottom I'm referring to in 2022. In November 2022 here on November 9th, we reached a bottom right here on November 9th with this bar right here. Then we went back up and we came down. We got a double bottom. We undercut this level just slightly by about $89, $90 or so, and we undercut it there on the 21st. And we had the low right here for our first double bottom. Look at that drop. And then we had that first low right there. The intraday low was 15,563 and a half. And then the intraday low over here is 15,473. So you're talking about a difference of $89 and some change, rounding up to $90. So the difference between the two is approximately $90. So I'm taking measurements from our previous cycle of 1,061 days from both of these lows, from the one here, our first low here on November 9th, and then the one on the 21st. So let me be clear. From the first bottom, had we taken 1,061 days from this bottom, for the first bottom that formed here at the beginning of November, again, you're looking at an estimated peak on October 5th. Okay, if we take the actual bottom, the second bottom, the actual date of, what was it, the 21st, the actual bottom, 1,061 days, then you're looking at estimate for October 17th. So far, we've peaked on October 6th, which was 1,062 days from the first bottom, which is very close to what we had happen, that 1,061 days between 2018 and 2021. And also the cycle very close to the 1,070 days between the first bottom of 2015 and the peak in December of 2017. So again, they're all pointing to an October date. And this all looking at that 4-year cycle where you tend to get, 1 year down and 3 years up. And again, give or take from cycle low to cycle top with actual dates in the daily time frame that I'm using here. The weekly bars, you're getting very, very close. You're getting from our first and second bottom, you're getting dates of October 5th was the estimate here, October 17th, the actual. This is the actual from the first bottom that we had 1,062 days. Very fascinating stuff. So just quickly, from cycle low to cycle high, looking at 152 weekly bars or 1,064 days. 152 weekly bars from cycle low to cycle high, 1,064 days. From the cycle low to cycle high, 152 bars, 1,064 days. The last two bear markets were 52 bars, 52 bars. So you get 152 bars plus 52 bars, get your 4-year cycle. 152 bars, the cycle low to the cycle top, and then an additional 52 bars to the next bottom. So from cycle low to cycle high, 152 bars or 1,064 days. This is the weekly chart we're looking at, but 1,064 days. Now, if we go from cycle top to cycle top, the cycle top over here in 2013 to the next cycle top in December of 2017, you've got here in the weekly time frame, you've got 211 bars and you've got 1,477 days. From the cycle top in 2017 to the cycle top in November of 2021, you have 204 bars, 204, very similar to the 211, and you have 1,428 days, very close to the 1,477. Again, from cycle top to cycle top, cycle top to cycle top. Previously, I showed you cycle low to top, the cycle low to the cycle top. Here's from cycle top to cycle top. You have 177 days, you have 428 days from cycle top to cycle top, and then from our cycle top here, we are now, with our October 6th peak, we are now at 204 bars, just like we were back over here. We are at 204 bars and 1,428 days. 204 bars at the October peak. 1,428 days. If we manage to clear that level and we get something similar to the 1,477 days, we get 211 bars, then you're looking at a November peak, but very close to one another. 1,477 days, 1,428 days from cycle top to cycle top. From this cycle top, again, either we're getting it right now with the 428 days with the 204 bars in the weekly time frame, or again, you've got a shot at it going to November. Now, each peak Bitcoin has been in November or December. It doesn't have to continue that way. You got people say, yeah, you can't have a October top. Bitcoin is very young, okay? It's not going to always peak in November or December. 2013, we had a November top. In 2017, we had a December top. In 2021, we had a November top. And tops have always been in either December or November. Now, again, that doesn't have to be set in stone, but it's something worth paying attention to. But again, from cycle top to cycle top, you're looking at somewhere between 204 bars, 211 bars in the weekly time frame, somewhere between 428 days, which we had with our peak here, and 1,428 say 1,428 days and 1,477 days, somewhere in there, and that would put us at an October top that we peaked or a November. But based on our previous cycle, from cycle top to cycle top, you're coming in 204 bars at the October peak at the 1,428 days. From cycle top to cycle top, suggesting we should be looking for a top in October or November. Here I have one of the exchanges, and again, that January bottom, that first double bottom was actually a bottom on some of the exchange charts in the example that I just showed you with the 152-week cycle going from the low to the high. Here, from the Bitcoin halving to the top, similar amounts of time that produced the peak in the last two bull markets. Here, from the 2016 Bitcoin halving, 17 months later, the top was in 17 bars, and there you have it. Before the bear market started, we dropped 84%. From the Bitcoin halving in 2020, right here, marked with this red line right here, and you could see down here, May of 2020, from the Bitcoin halving there to the Bitcoin top right here, and it's a little hard to see because I have the measurement, but that was a spike high right there. I'll move it over so you can see it ever so slightly there, just above the previous peak. But from the Bitcoin halving in May of 2020 to the cycle top was 18 months. Okay, so 17 months, 18 months, very, very similar. Okay, and then we had these similar drops. Again, back over here, 86% in 2013 to 15, 84% here after the 2017 peak, and after the 2021 peak, 78%. The bear markets for Bitcoin are usually around 80% to 90%. We've had one bear market, 93%. The others were in the 80s or close to it. Here was 78%. From the Bitcoin halving here in 2024 to right now, well, our current month of October, right now, you have 18 months. Very similar to these previous cycles, exactly with the 2021 top, exactly with the, or almost very close here, 17 months with the 2017 top in December of 2017. So Bitcoin halving to the cycle top, again, we could be concluding a peak here in October.